Welcome to Inside the Firm, a podcast dedicated to small business owners and hosted by entrepreneurs, Alex Gore and Lance Cayko. Each week, they take you on their journey of how to start, run, and grow a business by bringing you inside their architecture and real estate development firm. Get a behind-the-scenes tour of how these business leaders manage their clients and foster company culture while creating new and innovative projects. And now your hosts, Alex Gore and Lance Cayko.
Welcome to another episode of Inside the Firm. We're here with Lance. Get that elk, Cayko. He's going to get it next week. You'll hear about it. You
will not stop hearing about it. First of all, he will not stop hearing about it because I'm going to talk to him as if he's Cameron Haynes, and then everybody else is not going to stop hearing about it. Forever. Forever. Does he let things go? No, but that's why we're here.
I don't know what to do with this because I'll tell you, chat.
He just
can I
can't
refer
let
to
things
them
go.
as chat?
Yeah, but that's why we're here.
But I don't care. He still cares, as you could see. Do I just reply with, "That's your first elk"? Let me look up how many elk Cameron has killed.
If he wants to keep antagonizing me with this,
No.
I was never going to stop anyway.
Here's the thing. It's already stopped. He's just kept it going. So, this is getting crazy. Chat, this is going to get crazy. Anyways, what I was going to say is, first you'll hear it from the primal scream that will just come across every airway because he'll be in the mountaintops, so you will hear it. You'll just
Quite
hear it.
the intro.
You will hear it. Second, you'll hear it on the podcast.
Okay.
And just when he goes illogical and there's no response and you're like, why does he keep going? No one knows.
Wow. I mean, that's a little. We all know.
No one knows.
Okay.
No one knows. Anyways, with it, I'm Al Gore today.
That's it.
I'm Al Gore.
Plain old Al Gore.
That's it.
You love him.
Yep.
We all love him.
We have a great show for you today. We're going to help you see the future, and that's going to help you. Before you do that, why don't you just get good at your job, which is Revit, and then modeling like it gets built, and then crushing it.
Yeah.
And then getting more reward because you are modeling more responsibly. You're mimicking construction. Your team is all on the same page. Everyone's aligned, and your drawings don't suck, and you don't represent the industry badly when they say architects suck. Why don't you do that? Why don't you do that?
Loom is up. What is it doing today? Sorry. You should do that. It is. I'm telling you, this software. Speaking of segueing out of the software, our cat Spec Wizard has a new look. Spec Wizard is a patented tool that simplifies your specifications process, create accurate, customized specs in minutes, and save time, reduce errors, and ensure consistency with every project. This powerful, free tool now has a fresh design that you can see yourself at arcat.com. That's ARCAT.com. Just click on the Spec Wizard item. It will not let you down like Loom does sometimes. It will not. Al Gore. Al, Fed rate cut back to you, Gore. Oh, here we go. We got a chart to kick things off. Exciting.
The Feds cut rates by 25 basis points, which is a quarter point. They just say it that way because every industry likes
Sometimes
that.
they say 250 points. It's ridiculous.
250 basis points?
Yeah. Sometimes they say 250. Sometimes they say 0.25.
Yeah.
Sometimes it's
25.
25 BPS, whatever.
Yep. Yeah. Quarter point. Anyways, I think this is great. The big thing that the Fed said, because they asked, is this now the start of a sustained rate cut reduction in a systematic fashion? And Powell said we're going to take it meeting by meeting, right? Hopefully, honestly, because a lot of people were calling for a 50%, 100%, all that other stuff. I don't.
And look at that. There's a fourth one, 100%. Keep going.
Exactly.
He's not wrong. I'm not even making fun of you. I'm serious. This is what they do.
Yep. I think it should be.
Quantitative easing. Money printing. Keep going.
I love when that word came up and they kept saying it and no
You're
one.
like, what does that mean? Oh, good, they're easing. Oh, good, they're easing the pain. You're like,
Quantitative.
oh yeah.
Let's look up. Can you look up
You look it up because I got this chart. It eventually we're going to talk about.
Oh, it means relating to measuring the the quantity of something rather than its quality. So measuring. Listen, Lance. To measuring the quality of something the quantity rather than its quality. So we are deflating your money. So the quality is going down, but we're making more quantity of it. That is actually perfect. And I wish every time they said that, they would say the definition and then say, AKA money printing, and then wink at us.
Yeah.
Wink at us. Everyone should know, though, too, it's not just the U.S. China prints trillions of yuan all the time, and they do it. They've been doing it since the 1990s. And that's why their economy has been pegged lower, and then why they've built up their industrial base and all that other stuff. But just to let you know, like, that's the mechanism of it. Because every time the U.S. or whatever would want to adjust, China would be like, we just printed a trillion more yuan. And be like, that's not worth anything, guys.
Can I just say that it's why you don't be as if you hear like fear mongering about BRICS, BRICS. If you hear fear mongering about that, I'm actually convinced not to buy into the fear mongering. It's like everybody's propped up. I'd be worried if there was some giant government entity that was a rational actor, trustworthy, which used to be the U.S. supposedly. Then I'd be worried. If there was but they're really, everybody's in the same boat. It's all fake. It's all whatever. We're all just going along, smiling. So don't worry about it.
It's a good point. It's a good point because here I'll give you what I believe the facts on the grounds are. The most rational money printer and balance sheets is actually Russia. For their debt, they don't even have a debt. They have a surplus.
How much is Russia paying you?
Thank you for immediately.
I was actually hoping you would say it's Bitcoin.
Because
there's a ledger.
Yep. Bitcoin, I think, is just going to go up. Gold, you really want to think about.
I'm up 150%.
Yep. But you want to know what that actually means?
What?
Gold is actually stable money.
Yeah.
You're like, I don't.
It's so stable, it's hard to sell. Like if you own physical gold, it's a great investment because it's hard to sell. Like because it's so hard to sell. It's hard to move it. It's good. That's the purpose of it. Like, it actually isn't this transaction thing. Like, I have it in forms where, yeah, sure, I could go, like, pay for something with it, I guess.
Yep.
You know, small pieces, but...
And this is what I mean and why you should think about gold this way. And I think you can secure it in banks where, you know, Bitcoin is still digital and stuff like that. I think Bitcoin is an asset that will make you money. Mm-hmm. Gold is a source that will stabilize your money. Meaning right now... If an average house costs $400,000, it's actually probably $500,000. Let me do the math here. It costs 142 ounces of gold to buy. If you go back and chart it, probably within, you know, like if you go back 10 years, 20 years, 30 years, probably costs around 150 ounces of gold all the time to buy a house, right? So that means like if you want to keep your money, that's a good way to do it. Speculate, and I wouldn't even call it speculate. If you want to grow your money, do it in Bitcoin. Russia has the best balance sheet. And going back to BRICS, we'll circle all the way back. China will always put China first. India always puts India first all the time. And if you want to go into the history of that, why isn't India more on our side? Is because they hate the Brits for subjugating them.
They hate me.
Yep. And they see us as an extension of the Brits and the colonialism and all that. When we were actually
Aren't
the
you
ones...
part British too?
Of course.
Yeah.
We are the ones who, after World War II, told the Brits to break up all of their colonies and stuff like that. So they should be more nicer to us, but they're not because they are India first.
You're welcome for the English, India. Sorry.
Yeah. So know that India will always be India first, and so will China. So when you do a BRICS, and all of a sudden you do something, try to do something more stable, and China's like, no, we want to print this money to secure this industry. Like, China's going to do that. And then you can say like, well, America does that too, and things like that. It's just maybe my perspective is biased. It's just different when like there's no accountability for what China's going to do. They're just going to do whatever they want to do in their own sense. We got off topic. We are coming back to, I agree that the Fed should cut a quarter and a quarter, and I don't mind the pace that it's a quarter. My only point during this whole segment, and Lance has the chart up and he'll tie it in, is that should it have been earlier? because the rationale for cutting points is now inflation is within that 3%, under like between 3 and 2 is because of the job outlook. And if you followed any of the economic news, they kept revising all the jobs, and it went down from this year to last year, all the revisions down 800 to 900,000 people. And if you look at this chart in probably the third month of 2023 to the
okay,
to the third month of 2020, well, actually if you kept going into 2025, the job creations kept going down and down and down. If they would have started this 2-3 months ago, I don't think he would have been called too late, Jerome Powell.
Yeah,
I think he would have been right on time.
I know. I'm gonna
right on time.
Right on time, Powell. I know. I was gonna see if I could quickly find this screenshot documents. Is this in there? Photos. Nice. I actually had. I won't name his name, but I had a former friend on LinkedIn post. I have been diligent with applying and following up, eager to learn, hoping online, with a positive attitude and ready to work since I was laid off 2 months ago, and I have mostly kept myself from having a negative mentality about the job market. But I think I am at the stage where I need to ask for help. I'm at 625 applications, 11 interviews, feeling gutted, useless. I've applied to jobs at a quarter the salary I made, jobs that require only 1 to 2 years experience, not limiting myself at all, and still not getting callbacks. I have been employed since I was 16 years old, with 6 years in the Air Force and 12 plus years in the HR field, all with a spotless record. I can vouch for this guy. Pretty smart dude, by the way. Pretty high IQ. Well,
seems above average.
Exactly.
Seems above
and
average.
like trustworthy, all the good things. Yep. Just has some bad takes often, that's all. Now I am getting ghosted by employers after 2 interviews without any explanation and sending out writing assignments to the best of my ability to show that I can take on whatever is thrown at me. I've proven my ability to find the answers, adapt with constructive feedback, and instill confidence in my teammates in everything I do. I'm not perfect, but I just need someone to give me a chance. And with that chance, I will show up to work every damn day without complaint. So it's real. Like, this is a tough job market.
Yes.
And so everybody who's listening, but especially you students out there, the following message is for you. And that is, you can't lay yourself off if you're the boss. Like, you can if you want to get autistic about it, but you can't, right? That's the whole point of what me and Al did after getting burned in 2009 and 2009. I want to encourage everybody, like, entrepreneurship is the way if you want to take the ultimate control of your life, right? You're going to take on more risk. You're going to get more, then you're going to get more rewards. It's tough, but it's fun. It's a double-edged sword, all of the things. And you can, and you got to have a stable moat in whatever you do. So if you're talking to the designers out there, if you're trying to be an architect, a designer, you got to have multiple streams of income from multiple clients. If Al and I were only concentrating on multifamily right now, we would be dead in the water.
Or only high-end residential.
Yeah, sure. Right? Small commercial for us is doing volumes. Like, that's kind of where we're at right now with a lot of things. Construction-wise even, same sort of thing, right? Like, if we were only doing one of those 3, we would be in trouble. This is where it's at. Like, that's why the whole point of the show is to infuse this idea into you guys, hopefully, as positive reactionaries like Al and I are, of like, that's what you got to do. You got to take control. Because do you see once again how you're just not in control unless you are in control? Like, it's just, you're really subject to this macro environment. It's just kind of tosses people around. I'm getting it, like, and so that's sort of my rant and what I wanted to leave people with on that note today. I didn't even expect to go there.
Could I add on to that?
Yeah, of course.
Be flexible, bend, but don't break. Lance and I work with at least 3 structural engineers. A 4th might be thrown in there. And one of them I was talking to, and he said, "Hey, I just want to tell you what I'm hearing from the field, and it's just been weird because I haven't heard it. I'm going to these job sites, and these builders are telling me, like, hey, just sign off on this. I know it'll work. I'll take all liability. Just sign it. I'll even like sign a letter that's fine. And I go, Chris, that's not how it works. Like if a customer sues, like they sue. And just because
the owners, yeah, that doesn't make the owner not sue.
Exactly. Like, and that doesn't mean that you're not professionally liable for, and obviously he agreed to all this. And here's the difference though. Me and this engineer got another job from other engineers, because that big builder company keeps fighting with them because the concrete guys and the engineers don't get along, right? Here's a normal interaction that I might have with a structural engineer. Structural engineer comes off and they're like, hey, he might be, or she, we need to do it this way. Mm-hmm. You have construction knowledge. You might be like, okay, I understand that. That's going to mean X, Y, Z in construction. Can we do it this other way? And they might be like, no, that technically doesn't work, but I see where you're going. How about this? That's being flexible. That's bending but not breaking. That's the kind of mentality that you need.
Agreed. Yeah, bend but not break. Oh my God, 100%. 100%. Yeah. Hey, and I guarantee there are architects out there. This is, again, this is the last thing I'll say about it. I'm actually glad we landed here today, which I didn't expect, is for you folks that are looking for jobs. Even if you're like, let's say you got laid off and you're listening to this show. So you're not a student, right? You're like beyond student or whatever. I've told people this. Many of my students, and now I'm telling the audience one more time, is like, really consider who you're going to work for, right? Ask them these questions. What's your plan if there's a recession? What's your plan if there's a Great Depression? Are you only concentrated on putting all your eggs in one basket? You can say it in a different way, obviously, but like, do you only do high-end residential? What happens if high-end residential goes the way of itself? And
2008.
Stuff like that. Like, can you tell me about the resiliency plan of your business? I mean, these are hopefully like such unique questions that maybe even makes you look like a better candidate. I don't know. And then like, are they a feast or famine type of architect where they're like, how many hours a week you working? 50, 60? Are they gloating about it? Like, is that the way to go? Or are they trying to be more spread out like we are here, 40, 45? All that kind of good stuff. Okay, that was it. We got to get off the soapbox there. Let's get on to Yahoo Finance. I love how Al by the way, Yahoo Finance, thank you for all you do. Al, thanks for finding the articles. U.S. single-family housing starts near 2.5-year lows as inventory bloat weighs. I had heard from one of my developer buddies who literally built my house for one of my houses. There's some big builders in Colorado that are like $25 million in the hole this year type of stuff. Because they're just waiting. This is exactly this headline: inventory bloat waits.
There's this one development on my way home. They're adding like 4 houses, maybe a quarter at most. And you've seen neighborhoods go up. It's like they start framing a house a week or two later. You know what I mean? Like that. There should be 12 houses going. There should be at least 4 a month, not 4 a quarter going up. Yep. So it's the slowest development I've ever seen. So
yeah. What do you want to point out from the article, or is it just the headline? That is true like that? Because we can move past it. I got more.
Nope. Just that.
Yep. That works for me. Okay, here's the one I got, which is interesting. Oh, come on. There you go. Colorado Biz, my new favorite biz. You'll hear why. There's one thing, but you'll hear why soon. Maybe in November, once I get to go up on the podium. Hint, hint. Go to my LinkedIn, you'll see. Colorado housing shortfall eases, but costs still rise, they say. Denver, Colorado has narrowed its housing shortfall in recent years, but affordability challenges continue to grow. According to new analysis from the State Demography Office. In brief, I'm just going to give you the highlights here. Colorado housing shortfall fell to 106 units in 2023. That's not too bad. Looks like we're headed in the right direction. Yep. Sort of, but then there's a caveat, right? Peak shortage in 2009 reached 140. 2019 reached 140,000 homes statewide, and we all know a lot of it was the sugar rush. People had money, interest rates were low from COVID. 34,100 new homes needed annually to meet projected demand. Affordability worsens with higher interest rates.
Can we stop there? Because I just want to understand this.
Yeah.
Does this not make sense? Only 34,000 new homes needed to meet the demand, but they're building fell to 106. Do you get where I'm?
I sort of do, but I also, here's what it is, Al. It's like needed annually to meet projected demand. They're projecting the demand.
Yep.
And somehow, through whatever an analysis, and they're saying, if we just build 34,100 new ones each year, I think what they're missing is like for how many years, right? If we did it for just one more, if we just did that next year in 2026, are we good? I don't know. Because the thing that I think is not mentioned in this article, it's probably a lot of data to dig through, is that the population is now stagnant in Colorado.
Yes.
We're finally done with the Californication for a while. We'll see. We'll see if the state ever gets purpley again. I would like it. Man, when me and Al were like through our first election cycle here in like 2012, 2013, 2012 was what it would have been. So it would have been Obama's second term, right? When he got elected, it was just nice and purpley here. Everybody felt like they got a voice, both sides. It's all good. I would love it if we go back to that.
Yep.
Try not to digress again. Okay. And then the last one is this, and this is the title of the show. The title of the show today is What the Fed Rate Cuts Mean for Housing and the Economy. So, I know a lot of, no offense, I'm even in this category sometimes, normies out there were going, yay! Interest rates are going down. And at a surface level, yes, but that's just overnight lending rates. That doesn't mean that your mortgages are going to go down. There was a guy who posted, I thought it was brilliant the other day. You should go follow him. I think he's fantastic. I might have him on the show one day.
What's it, LinkedIn?
Yep. Ryan Sullivan. He and I have talked a lot, actually.
Oh, no, he, God, I swear I know him.
Keep going. Just keep talking while you're...
He was on our podcast. I interviewed him.
You interviewed him?
Yep. He's my best friend. Yeah.
Look at me.
But no, he's great.
I'm dumb.
I met him at the conference in Montana that I spoke at.
Oh, okay. Yeah, gotcha. Here we go. Here's what it was. He posted, he's been trying to get me to do investments with them. I'm like, I'm not your target audience, believe it or not.
Following.
And I pointed him to other people who are. Anyway, Ryan posted, I love when the Fed cuts interest rates and rates go up. Sounds impossible, right? But this is exactly what happened yesterday. Here's the thing. The Fed doesn't actually set long-term interest rates. The market does. Yesterday, the Fed cut rates by 0.25%. For a few minutes, yields on the 10-year Treasury dropped. But within the hour, they were higher than before the announcement. Why? Ryan's very smart. Because the bond market is looking past what the Fed or President Trump wants rates to be and is asking, how strong is growth? Where is inflation headed? What should the real cost of money be? And right now the market is saying growth and inflation are still too strong for rates to stay low. So even though the Fed is trying to push rates down, the market is effectively saying, nice try, but rates need to be higher. This is why you can't just trade based on what the Fed does, which is totally true. So Ryan's right. I think the NAHB has a good take here. And so from the article, what they're saying is after keeping rates steady through most of 2025, the Federal Reserve's Monetary Policy Committee voted at its September meeting to cut its key interest rate by 25 basis points, bringing the target federal funds down to 4.25%.
We need to tag Ryan in this because and have him react. The world has changed, and your investment strategy should be too. Because if your portfolio is loaded up on bonds because someone told you they were safe, you might be missing out what's really happening in the economy. So, what should your investment strategy change to? Ryan, hit us with it, or make a post, and we'll see it.
Yep,
we'll read it.
So here's in short what the NAHB is saying the impact on housing will be. The rate cut will have a direct beneficial impact on builders, especially those relying on acquisition, development, and construction loans. These loans are the key to getting new homes built, particularly by private builders who construct more than 60% of the country's single-family homes. Lower borrowing costs for builders could help ease housing supply constraints across the economy. However, Powell acknowledged that the housing market remains weak and noted that many of the issues, such as high regulatory costs and persistent housing shortage can't be solved by monetary policy alone. Agreed. Still, the Fed's action should offer more relief on the financing side.
So just going into this, because I think it's a multi-pronged approach. I was walking by, I was at King Soopers, and I saw the Denver Post, and the article was regulations and burdens add $64,000 to housing costs. And we've already went over this ad nauseum. I'm glad that the mainstream is picking this up, and especially in Colorado, since the mayor is trying to do so much about it. I can't stress enough to all the architects here. If you look at where people actually live in their houses, if you just look at the number of houses built, the majority of houses easily were built before 2010. Easily. Like, just look at the raw numbers. One of the things we need to do, and I have a fix for this, and I've said it before, but we need to go back to like 2009 standards. 2009's is the bottom standard.
2006.
Okay, Lance says 2006. I love it.
But hey, if we went to 2009, I'd be happy too.
Yep.
Just to be clear, this is just my preference.
Yep.
I thought 2006 was so good.
And then the argument will be, and I understand this argument, especially when we do 3-4 story buildings, stuff like that. And then when we do tiny homes and straw bale homes and all these other ones, now we can't do those because those weren't addressed in 2009. We can't do timber structures, large timber structures, right? No. 2009 is the baseline. Anything past that, you can use as a justification for what you are doing. Doesn't that make sense? Like, 2009 is the baseline, but let's say you want to do a tiny
And then amend
homes.
whatever stuff else you want in.
No.
No? Oh.
2009, you can go to that baseline. But let's say you want to do a tiny home, and they'll be like, that's not in the 2009.
Oh.
You'd be like, yeah, but in 2021.
We're sort of saying the same thing.
Yep, but
okay.
Instead of like amending everything back in, no. When you go to apply for something as an architect, you can say, this house applies to the 2021 tiny home building code. Thus, we're good. And I'm like, yep, that's great.
Yeah. I like it.
Good.
We
solved it. That was it.
You're welcome.
Just make that happen now, world.
2 things. Jerome Powell, thank you. I know you're a big listener. And the second thing is, you're welcome, everybody else.
Yeah.
Last thing here.
You should have ended that with an alcohol. You should have had the alcohol with you.
Well, John has the bugle. He took the other one. I could only sound like a little baby cow right now if I went and got my read. Slowing economic growth ahead is the last part here. The broader economic outlook points to slower growth. Moving forward, the Fed projects GDP will grow just 1.6 in 2025 with a slight increase in unemployment to around 4.5. Inflation is expected to gradually decline, but the Fed doesn't see its 2% target being met until 2028, highlighting how persistent inflation pressures continue to be. Overall, while this rate cut is expected, it signals a shift in tone. The Fed is opening the door to further easing, but as Powell emphasized, future moves will depend entirely on how economic data evolve. So there you go. That's what we got. I think this is just, last plug would be, if you're hearing this, and I do think Jerome Powell's probably right about the broader economic outlook. So is the NAHB. Not sure we're out of the weeds yet. It's just going to be kind of another choppy year in 2026. You are going to want to extend your moat you're going to want to extend the boat so you can float the moat. And what you need to do for that, I know that was good. And what you need to do for that is you need to go to architectsguide2.com.
Yep.
You got to become an architect who's also a builder, because I'm here to tell you that has made it so we are just, me and Al are just floating along. We're going slow.
On our boat.
Steady.
In the moat.
Yep. We're catching some fish along the way.
Yep.
It's all good. So, yeah, that's what we got for you this week. If you like this episode, you're on the YouTube. You need to like. You need to subscribe. We need some competition for Jason Altman, who's the MVP of the comment section. Leave us a 5-star review on the iTunes. We'll see you next. We will see you next week. I will see you next week with Elk. See ya.